Hello everyone, and thank you for joining today's True Trading webinar. I'm excited to be here with you. My name is Mohammed Azim from Traders United. True webinar house rules. Please take the time to read important rules for webinar attendees. Let me start by sharing a little information about myself. I'm a certified elite wave analyst, having earned my level 1 certification back in the year 2012 with a score of 93%. This certification deepened my understanding of market behavior, especially through the lens of elite wave theory. In addition to my work as an Forex analyst, I'm also an author and educator. I wrote Introduction to Elliott Wave Theory, a book designed to help traders like you build a strong foundation in understanding the intricate structure of market waves. But my expertise does not stop at Elliott Wave. Over the years, I have expanded my knowledge into broader market analysis, diving deep into market trends, chart patterns, and price action strategies. So, whether you are a beginner or an experienced trader, I aim to provide you with valuable insights that will help you navigate and succeed in the Forex markets. With that, let's dive into today's session. These are the session goals. Let me talk about macroeconomic events and data releases. I am going to cover previous week fundamental analysis. The first one is the core CPI month over month in USA related to euro dollar currency pair. The date and time was June 10th, 12:30 p.m. UTC time. Next one was the building permits month over month in Canada. The currency pair to focus USDCAD. The date and time was June 11th, 12:30 p.m. UTC time. So let's start with the first one. Core CPI M over M in USA. M over M means month over month. So what is core CPI month over month in USA? Core CPI, also known as Consumer Price Index, month over month measures the change in consumer prices, excluding food and energy. It is one of the most important inflation indicators in the United States. A reading above expectations suggests rising inflation pressures, which can increase the likelihood of higher interest rates. This is generally supportive for the US dollar and can push the Euro USD lower. A weaker than expected reading indicates easing inflation pressures, which may reduce expectations for tighter monetary policy. This is typically negative for the US dollar and can support the Euro USD to the upside. Now, the event details. The previous reading was 0.4%, forecast 0.3%. The actual number we got is 0.2%. The currency pair to focus is the euro dollar currency pair. Now, let me show you a price chart of euro USD currency pair first. This is the daily time frame. The market context and the pre-release expectations. Forex market participants expected US core CPI to slow from 0.4% to 0.3%, indicating a gradual moderation in underlying inflation pressures. Because core CPI is one of the Federal Reserve's most closely watched inflation indicators, currency traders were monitoring the release for clues regarding future interest rate policy. A reading above forecast would have reinforced expectations for tighter monetary policy and supported the US dollar. Conversely, a weaker reading was expected to reduce inflation concerns. and weaken the US dollar. Now, the market reaction. Let's discuss that. The core CPI reading came in at 0.2% below the previous reading of 0.4%. The date and time was June 10th. And if we go over to a price chart of euro dollar currency pair, so over here we got kind of a doji pattern in euro USD, and then market rallied up in euro dollar currency pair. So following the release, the euro USD moved higher as traders interpreted the weaker inflation data as a sign that US price pressures are easing faster than expected. The softer inflation reading reduced expectations that the Federal Reserve would need to maintain restrictive monetary policy for an extended period, leading to broad US dollar weakness. Now, why Euro USD moved up? What's the reason? Several factors contributed to the bullish move in Euro USD. Lower than expected core CPI reduced inflation concerns. Markets increased expectations for potential Federal Reserve rate cuts. US Treasury yields softened after the release. The US dollar weakened against major currencies. Forex investors viewed the financial data as less supportive for aggressive Federal Reserve policy. The combination of these factors created buying pressure in euro dollar currency pair immediately after the news announcement. The key drivers to observed in the market. The core CPI actual was 0.2%. Let's go back to the PowerPoint. So over here, 0.2%. The forecast was 0.3%. The previous reading was 0.4%. The reduced expectations for higher US interest rates, weaker US dollar sentiment across the forex market, lower treasury yield expectations. These are the main key market drivers that we observed. Technical and sentiment considerations. The weaker inflation data generated bullish sentiment for Euro USD in the short term. And I do expect a drop in price action of euro dollar currency pair. And it's quite possible that market is going to test the next support area. So if I go over here, let me delete this one. Price action is probably going to test this support over here, and we might even get a break to the downside as well. So my trading outlook on a short-term basis is somewhat neutral. I expect market to move up a little bit and then drop back down. So kind of a sideways to overall bearish uh, expectation in euro dollar currency pair. Forex traders should continue monitoring US economic data and Federal Reserve communication for additional direction. The overall analysis is the USA core CPI report came in weaker than expected at 0.2%, signaling a faster slowdown in underlying inflation pressures than currency markets anticipated, because inflation is a key driver of Federal Reserve policy decisions. The softer reading encouraged expectations for a less restrictive policy outlook. As a result, the US dollar weakened and Euro USD moved higher following the news release. The financial report reinforced market expectations that inflation pressures are gradually easing, providing short term support for Euro dollar currency pair. The final key takeaway is the previous reading we got, the CPI, core CPI reading we got is 0.4%, forecast 0.3%, and the actual number we got is 0.2%. The US core CPI came in below expectations, indicating softer inflation pressures. The weaker than forecast Reading reduced support for the US dollar and helped push the Euro USD higher after the Forex news release. The data strengthened market expectations for a less aggressive Federal Reserve policy outlook, creating a bullish short term environment for Euro dollar currency pair. The next one is the building permits, M over M in Canada. That was the important Forex news announcement, which came out on June 11 at 12:30 p.m. UTC time. Now, what is building permits month over month in Canada? Building permits, M over M means month over month, measures the monthly change in the total value of new building permits issued in Canada. It is a leading indicator of future construction activity and overall economic growth. Reading above expectations suggests stronger demand in the construction sector and improving economic conditions, which can support the Canadian dollar and push the USD-CAD lower. Weaker than expected reading indicates slowing construction activity and economic weakness, which can weigh on the Canadian dollar and push USD-CAD higher. Now, the event details. The previous reading was 10.6%, forecast minus 3.7%, and the actual number we got is minus 7.6% in red color. Now, let me discuss market context and pre-release expectations. And let me also show you the price chart of US dollar CAD currency pair. Forex markets were expecting Canadian building permits to decline sharply from 10.6% to minus 3.7%, signaling a slowdown in construction activity and weaker investment momentum in the housing sector. This expected contraction reflected concerns about cooling economic conditions in Canada and reduced business confidence in future building activity. Because building permits is a leading indicator of economic growth, Forex traders closely monitored the release for confirmation of whether the slowdown was deepening or stabilizing. A result better than minus 3.7% would have suggested resilience in the construction sector and supported the Canadian dollar. A weaker reading would confirm further economic deterioration. Now, the market action we got is the actual reading came in at 7.6%, significantly worse than both the forecast of minus 3.7% and the previous figure 10.3%. Following the release, the USD CAD currency pair moved higher as weaker than expected financial news data signaled a sharp contraction in Canada's construction sector. Currency traders translated the financial news data as a sign of weakening economic momentum, reducing confidence in the Canadian dollar. As CAD weakened, USD CAD gained upside momentum, supported by both the Canadian dollar selling pressure and continued relative strength in the US dollar. Now, why USD CAD moved up? The upward move in USD CAD was driven by several key factors, significantly weaker than expected building permits of minus 7.6%, concerns over slowing Canadian economic growth, weaker outlook for housing and construction investment, reduced expectations of Canadian dollar strength, relative resilience of the US dollar during the session, shift in market sentiment toward defensive positioning on Canadian dollar. The combination of weak domestic data and broader US dollar support created strong bullish momentum in USD CAD after the news release. The key market drivers observed are the building permits and the minus 7.6% versus the forecast minus 3.7%. That's a sharp contraction in Canadian construction activity. Negative sentiment towards Canadian economic outlook, weaker Canadian dollar demand in forex markets, relative US dollar strength supported by macro positioning. Technical and sentiment considerations. The sharp downside surprise reinforced bearish sentiment for the Canadian dollar in the short term. USDCAD reacted with the upside volatility as currency traders adjusted expectations for Canada's economic trajectory. With the initial reaction favored USDCAD strength, follow through will depend on broader factors such as oil prices, Bank of Canada policy expectations, and overall US dollar trend. The trading outlook. The short-term bias is obviously bullish in USD CAD principle, and the way I see market is probably going to rise up even further. If we take a look at the weekly time frame over here, let's remove some of this stuff. So the way I see USD CAD is probably going to rise up even more. So my forecast is bullish. Okay, the significantly weaker building permits data supported continued pressure on the Canadian dollar in the near term. If upcoming Canadian economic data continues to disappoint, USD CAD may remain supported. However, oil price recovery or stronger Canadian macro data could limit further upside. Overall analysis is the Canada's building permits data showed a much sharper contraction than expected, signaling weakening momentum in the construction sector and broader economy. As a leading financial indicator of future growth, the weak reading increased concerns about Canada's economic outlook. It reduced support for the Canadian dollar. This resulted in USDCAD moving higher after the Forex news release, driven primarily by Canadian dollar weakness rather than strong US dollar fundamentals alone. The final key takeaway is the previous reading was 10.6%, forecast minus 3.7%, and the actual number we got is minus 7.6%. This significantly weaker than expected building permits data signaled a sharp slowdown in Canada's construction sector. This weakened the Canadian dollar and contributed to a bullish move in USD CAD following the news release, as forex markets priced in softer Canadian economic conditions. Now, let us take a look at previous week global market trends. I'm going to take a look at euro dollar and USD Swiss franc currency pair. The euro USD currency pair, we got kind of a break of this bullish trend line over here. So this is telling me that market wants to move sideways or go down a little bit. If we take a look at a daily time frame, market kind of bounced from the support area, but it has failed to print a new high above this high over here. So it's quite possible that market is probably going to drop more in euro dollar currency pair, especially if we take a look at the 4-hour chart. So price action did try to go up a little bit, but this is the resistance area, this yellow color highlighted area. That's the kind of a zone. So euro USD is going to drop. That's the forecast. It is only going to turn bullish if price action manages to breaks above 1.1645 resistance area. Okay. Next one is the US dollar Swiss franc. The USD Swiss franc currency pair, the overall trend is down in weekly time frame. In daily time frame, it looks kind of a bit like an uptrend going on over here. And even in 4-hour time frame, this is the support area. So as long as price action is staying above this support, it's quite possible that we might get further upside in US dollar Swiss franc currency pair. Now, let me talk about the current week's macroeconomic events and data releases. I will be covering the key developments in Forex market with a focus on fundamental analysis. The first one is the federal funds rate in USA, and we're going to discuss the euro dollar currency pair. These are the upcoming Forex news events. The date and time is June 17th, 6 p.m. UTC time. The next one is the RMPI, month or month in Canada. The currency pair to focus is the USD-CAD currency pair. The date and time is June 18th, 12:30 p.m. UTC time. Now, let's start with the first one, federal funds rate in USA. Now, what is federal funds rate in USA? The federal funds rate is the primary interest rate set by the Federal Reserve in USA. It represents the rate at which United States banks lend reserve balances to each other overnight and is one of the most important drivers of global financial markets. The interest rate directly influences US dollar strength, bond yields, and global risk sentiment. As a result, it has a strong impact on the euro dollar currency pair. A higher than expected rate decision or a more hawkish policy tone generally supports the US dollar and can push the euro USD lower. A lower than expected rate or dovish guidance tends to weaken the dollar and supports euro USD to the upside. Now, the previous reading was 3.75%. Forecast is also 3.75%. Actual data not yet released. It is going to be released on June 17 at 6 p.m. UTC time. Now, let me discuss market context and pre-release expectations. Market expectations suggest the Federal Reserve may maintain the current rate at 3.75%, indicating a stable monetary policy stance. Currency traders are not only focused on the rate decision itself, but also on forward guidance, economic projections, and commentary from Federal Reserve officials. If the Fed signals a more hawkish stance, concerns about inflation, or readiness to tighten future, the US dollar could strengthen. If the tone shifts dovish, concerns about economic slowdown or easing inflation, the US dollar could weaken. Euro USD is particularly sensitive to interest rate expectations because of the large yield differential between the US dollar and the Eurozone. Now, why Euro USD could move up or down after the news, why we could see some activity over here? Well, there are key drivers for potential price action that include actual interest rate decisions versus expectations, forward guidance from the Federal Reserve, inflation outlook, and economic projections. US Treasury yields reaction, US dollar strength or weakness, Eurozone versus US monetary policy divergence. Even the rate remains unchanged. Volatility can be high due to the policy statement and press conference. The technical and sentiment considerations. Euro USD may experience sharp volatility during and after the announcement. If we go over to the price chart of euro dollar currency pair 4-hour time frame, you can see that right now it looks kind of a bearish to me. Okay. So if policymakers indicate a pause or future easing, euro USD may rally on US dollar weakness. Currency market positioning ahead of the event may also amplify price swings, especially if liquidity is thin around the Forex news release time. So trading outlook is a little bit bearish, and we might see a range expansion right around the news announcement time. Upside scenario for euro dollar, if the dovish tone or if we get a signals of future interest rate cuts. Downside scenario for Euro USD is if we see a hawkish tone or signals of prolonged high interest rates. Currency traders should expect elevated volatility and potential false breakouts during the initial Forex news reaction phase. Overall analysis is the federal funds rate decision is one of the most influential macroeconomic events for the US dollar and global forex markets. While the market currently expects no change at 3.75%, the real volatility driver will be the Federal Reserve's forward guidance and economic outlook. So the euro dollar next direction will largely depend on whether the Fed signals tighter, stable, or easing monetary policy conditions going forward. Final key takeaway is the euro dollar traders will closely watch the Federal Reserve policy decision and statement. Even if the rate is unchanged, shifts in tone or guidance can trigger strong volatility. A hawkish outlook may support the US dollar and pressure the euro USD lower, while a dovish tone could weaken the US dollar and supports the euro USD to the upside. The next important financial news event is the RMPI month over month in Canada, which is going to be happen on June 18 at 12:30 p.m. UTC time. So what is RMPI month over month? RMPI stands for Raw Materials Price Index, and MORM means month over month. It measures the monthly change in prices paid by the Canadian manufacturers for key raw materials such as crude oil, metals, and agricultural inputs. It is an important financial indicator of producer level inflation in Canada. This data is closely watched because it provides early signals of inflation trends before they appear in consumer price indexes. As a result, it can influence expectations for monetary policy decisions by the Bank of Canada and impact the Canadian dollar. A stronger than expected reading suggests rising input costs and higher inflation pressure, which can support the Canadian dollar and push the USD CAD lower. A weaker than expected reading suggests easing cost pressures, which can weigh on CAD and supports the USD CAD to the upside. Now, the previous reading we got was 10.3%. Forecast is minus 3.7%. Actual data not yet released, but it is going to be released on June 18 at 12:30 p.m. UTC time. Now, let me discuss market context and pre-release expectations. Forex markets are expecting a sharp decline in RMPI from 10.3% to minus 3.7%, indicating a significant cooling in raw material price pressures compared to the previous period. This expected slowdown suggests weaker commodity driven inflation and potentially softer input cost demand within Canada's industrial sector. Currency traders are closely watching this release as it may provide early confirmation of whether inflationary pressures in Canada are continuing to ease or stabilizing at higher levels. A reading above minus 3.7% would suggest stronger than expected inflation resilience, supporting the Canadian dollar. A deeper contraction would reinforce expectations of weakening inflation momentum. Why USD CAD could move after the news release? Well, there are several key drivers for potential price action that include actual RMPI result versus forecast and previous reading, Canadian inflation expectations and producer cost trends, Bank of Canada interest rate outlook, oil and commodity price movements, and US dollar strength and yield differentials. Because RMPI reflects cost pressures in key industries, it can influence expectations for future inflation and monetary policy decisions. The technical and sentiment considerations. USD CAD may experience increased volatility around the release due to its direct link to inflation expectations. A stronger RMPI reading would likely support the Canadian dollar strength and push the USD CAD lower. Well, the trend is currently up over here in USD CAD currency pair. A weaker reading would likely weaken CAD and support the USD CAD to the upside. Well, it's already going up. So short-term bias is, I would say, neutral to slightly bullish in USD CAD currency pair. Downside risk for USD CAD is there if the RMPI comes in stronger than expected, above minus 3.7%. Upside potential for USD CAD if RMPI shows a deeper contraction than expected. Currency traders should expect sharp volatility around the release as currency markets adjust inflation expectations for Canada. Overall analysis is the Canada's RMPI is expected to show a significant decline, indicating easing raw material price pressures and potential cooling in producer level inflation. This Forex news release is important because it helps shape expectations for future inflation trends and monetary policy decisions by the Bank of Canada. While the immediate reaction may be driven by headline deviation from expectations, broader USD CAD direction will still depend on oil prices, interest rate differentials, and overall risk sentiment. The final key takeaway is the previous reading we got 10.3%, forecast minus 3.7%, actual data not yet released. USD CAD Forex traders will closely monitor the RMPI release for signals about Canada's inflation trajectory. A stronger than expected result could support the Canadian dollar and push the USD CAD lower, while a weaker reading may strengthen USD CAD bullish momentum. Now, let us take a look at current week Forex market trends. First one is the Euro USD, then I will also talk about AUD USD currency pair. So regarding the euro dollar currency pair, the trend is up over here on a long-term basis. However, we got this break of this trend line, so market might try to push lower over here. So in euro dollar daily time frame, we might get a drop in price action. Next one is the Australian dollar versus United States dollar currency pair, AUD USD currency pair. The trend is up in a weekly time frame. In daily time frame, we got this breakdown. So this is kind of a retest over here. And the way I see market is going to continue the decline in AUD USD currency pair. Next one is the USD CAD. On a weekly time frame, this is kind of a breakout over here, which might fail. Here's the resistance. So if price action manages to breaks above this resistance area, then obviously it might go up even further. Otherwise, to me, this is just a false breakout and overall sideways price action, and it's possible that price action could go up a little bit more and then starts the decline in USD CAD currency pair. So in daily time frame, my forecast is a little bit bullish in USD CAD currency pair. Next one is the spot gold. Spot gold actually tested this trend line over here and then kind of bounced back up. And the way I see, this is what I've told you guys last week, that USD, US dollar versus the uh, gold, chart, it's probably going to rise up more and then expect further weakness in price action. So spot gold expect kind of a short-term bullish bias. It might not go up all the way up over here. So expect a short-term bullish leg and then further weakness in price action. I will take a few minutes now for questions and comments. If you have any questions or comments related to today's Forex trading webinar, feel free to type inside the chat box. I will be happy to answer your questions. Okay, I see some of the questions over here. Okay, the question is, what is your go-to technical indicator? Well, my go-to is price action mainly. I use mainly Elliott wave analysis along with a combination of support and resistance levels, the trend lines. So I usually give more importance to price action. Okay. Another question is crypto ripe for a bull run, or is it going toward a more gradual recovery or even a downtrend? Well, based on the current market signals, the crypto market is less about a sharp bull run and more about a period of hesitation and potential consolidation with a tilt towards a gradual recovery later on. So we're getting kind of a mixed picture uh, in the crypto market. So let us review what we have learned today. Well, we discussed about the upcoming Forex news events, federal funds rate in USA and RMPI in Canada. Also, I discussed the price charts of euro dollar, AUDUSD, USD CAD, and spot gold. These are the assets to watch out for profits. What you should do next: stay tuned for the schedule of next week's trading webinar. Subscribe to our social media pages to stay updated with true exciting events, trading content, and market insights. If you want to learn more about Forex trading, visit TradeGeek and access free trading courses for beginner, intermediate, and expert traders. Thank you for staying with us. See you at the next trading webinar on Tuesday, June 23rd, 2026 at 12 p.m. UTC at the same time. That's all from my side for now. Have a great day and goodbye.